Aloha, and thank you for joining me for some Java. It is August 28th, 2024. It's Wednesday, better known as wait until after the close for NVIDIA earnings day, because that's pretty much what the markets are doing. We've also got Discord today as a discussion after the live this afternoon. If you would like to join us, we've got some pretty interesting things that we like to bring up. You can just come into the chat room. You don't have to talk if you don't want to. Could be quite interesting. I'll leave a link in the description if you would care to. So with this, let's take a look at what's going on in our crazy markets lately. Okay, starting with our favorite risk indicator, the MMRI, pull back slightly, not a lot. What happened yesterday was the relative strength of the dollar 10-year yield both pulled back early in the morning as we were kind of expecting. The stock markets took off for a bit. As the day went on, they started gaining some strength. That put some weakness in the markets. There were a few other things that happened, and they pulled back a bit. So basically, we've got some market chop going on. Investors are really looking towards NVIDIA earnings come out after the market closed today. So that's going to be a huge thing because the market cap is so large. Basically, everybody's pinning their hopes on not just the chips, but this is really all about artificial intelligence and the incredible run up that the market has had. So with this, we've got our fear greed meter still at 53, is quite high. So investors still in for the market looking to buy the dips. And we've still got, as we were talking about yesterday, the inflationary pressure, which is also moving into stocks. So with this, we've got Bitcoin cryptocurrencies pulling back right now at Bitcoin below the $60,000 level. So showing some weakness here, but keep an eye on that. If it can't recover above the 60,000 level, then there's more weakness to come. Could go down to, again, those same levels at 58, 56.5, possibly 52. I don't think we'll be that lucky. So with this, we've got weakness in oil coming back. Now, the Middle Eastern tensions are kind of cooling off, and that is putting more demand pressure as it drops, putting pressure on the price of oil. Now, we've got gold also pulling back as a safety play, so to speak. Everybody's piling their money into the stock markets, and we're watching the VIX, is the volatility index, increasing. So as this increases and the fear level increases, this could lead to basically larger, faster moves. It's lower volume, it's retailer money, so could be faster, more violent moves in this chop. Once these numbers come out prior to market open tomorrow is really what it'll affect. So I put salad chop until NVIDIA earnings, so salad with green and red coming in. We will watch this. IV crush, so this is implied volatility. When there are large moves expected, this increases. So if you're looking at options today, really I'm sitting on the sidelines because that IV number is so high, it's not really worth what could be on the other side of that for me. So with this, we've got something larger looming in the background. And this is the real danger behind all of this, not necessarily just for today, but in general. JP Morgan is now basically saying they are predicting liquidity to contract as temporary boosts fade. Now, NVIDIA is one of these temporary boosts that he's speaking about. We're talking about liquidity of capital. So if this locks up, if the liquidity drops, then basically nobody is trading anymore. The movement of money is what this is speaking about. All things halt. That is the freeze on banks, and that is what the Federal Reserve is attempting to basically put off and avoid. So basically, the reason they keep pumping all of this money into the system and why we've got all of these loans, all of this quantitative easing going on, is to avoid this liquidity lockup, if you will. Greg speaks about this a lot. If you have questions about this, leave it in the comments, and I encourage you to go over and listen to him because he explains it quite well. Okay, moving on with our calendar today. Now we've got an anomaly. For the longest time, everyone's had their eyes on the Federal Reserve looking towards cuts. Now today we've got Fed presidents, Fed governor speaking, and nobody's really going to listen to that because really what they're looking towards is the nvidia earnings after hours today. So with our earnings, we've also got CrowdStrike, Salesforce, and Affirm. We've got some large names reporting today. HP. And then prior to market open tomorrow, we've got jobless claims, which is now the preferred metric that the market is watching for the Fed, as well as some inventory and the GDP. So with all of this, we've got this market shift looking forward on all of these things. Also got earnings coming out prior to market open Thursday. And interestingly, we've got Atlanta Fed President Bostic will be speaking tonight, 6 p.m. So if there are any market shocks that happen, they can manage this with their language. Now, he's not actually going to take any action as far as cuts, but what they've been doing is the psychological action of their speech to manage the markets. Okay. So with this, let's go in this whole thing. Fear, greed is what runs these markets. 90% psychological. So with this, I'd like to go into the real economy. Now we've got our first daily dose coming out of mainstream media of propaganda. And this is that top companies are feeling more optimistic about the future. Now they've got a transcript analysis showing this. They have to analyze the transcript of what these companies are putting out. So just because they're not as pessimistic as they were the last week, they're saying they're more optimistic. This is basically a dish of propaganda and garbage for you to eat, because really they're not looking that great, and I'll go into that in a bit. Now, we've got what we call perceived wealth. This is not kind of like the unrealized gains they're looking at taxing in the future. But if your home price goes up, you're not planning on selling. So it doesn't really matter, but it makes you feel wealthier simply because you feel like you have that as a resource to tap. Now, this is going on across America, and this is basically a perfect example. U.S. home price gains are outpacing inflation with a 5.4% annual increase. Now, again, these numbers are skewed, but what this shows is that because home prices are still high for the moment, that people feel good about the economy, that basically perceived wealth is still driving them to spend. Now, what we may see here is violent reversal again, not just the housing market, so that would cut spending, but this also crosses over into corporations in the business world. Now, I'm bringing this up because prime example right now, NVIDIA's earnings, everybody's looking towards this. For aftermarket today, now we've got Apple cutting about 100 jobs in services group and their teams responsible for the books and news team as a shift in priorities. They're cutting costs, just like multiple other companies that we're watching across the board. Now, if we see these earnings drop, we're going to see the perceived wealth equivalent in the work world, in the corporate world hit, and they will start cutting costs, which means cutting jobs. Cutting jobs will hit private sector, homes, loans, etc. It will be a snowball. So with this, it hasn't hit yet, but it's right around the corner. Okay, so with this also happening with companies, just showing what everything they are pouring into this artificial intelligence, which is driving NVIDIA on the chips. Nearly half of OpenAI's AGI safety researchers basically cut because they're abandoning their safety part of this and not supporting this. So they're upset with the company, but I'm putting this here as an example for the drive to make profit. They are abandoning all safety issues with this. And they're also not paying attention, artificial intelligence, power hungry. So much so, they're reviving nuclear energy plants that have been closed for a couple of decades. They're reviving this just so they can feed this. What is this going to do moving forward will also affect oil. If you think they're going to stick with clean energy to drive their trillions of dollars they're looking forward to, then you're nuts. You're not looking forward to the big picture of what's going on here. We've got some alternatives that are available, but corporations are not going to turn to that. They want, first off, what makes them profit. Second, what is cheap and easy. So that will drive that going forward. Oil is down right now on demand, and that is showing that we've got a shift for correction incoming. So just to warn about that. Okay. Couple of other things. There is a bigger picture out here that they are driving. So with this, the debt market, and I just want to bring this up. This was an interesting story. Bulgaria now selling their first dollar-denominated bonds in a couple of decades, because this is all of the between the euro and the dollar, and they must all walk in lockstep with the central banks, the hikes, and their debt. We're watching this debt, and with that, that's why we always start with the indicators. The relative strength of the dollar and the 10-year yield shows is an in view to the debt. So with this debt market all coming to play, with this, we're in a war economy. They're driving more war in the West in general, not just the United States, but also with the euro. So we've got the state's defense minister, this in Latvia. They are now calling for not just draft for men, but the conscription of women. So this will cut into the population quite severely, and expect this to grow. This war is not going to end anytime soon. They have the opportunity for peace talks. They are not taking them. They're not heading towards peace. This is going to continue. That way they can continue to feed the military industrial complex. They can continue to create weapons that will drive our GDP, which is the GDP number we will be getting the next day. That are going to use this elevated number to say how the economy is good, and it's far from it. Now, numbers market are elevated. They are not the true economy. So just want to wake you up to this. Again, we've got Discord this afternoon if you would like to discuss any of these items. These are the types of things that we speak about. Feel free to join us again. We'll be there this afternoon after the live, 5 p.m. Eastern Daylight Time. And until I see you again, my friends, stay free.